Hey, this is Sasha, and thanks for joining me here for another episode of Let's Talk Stocks, episode number 153. And in today's episode, what I want to do is talk about some stocks. We'll get into some common stocks, see how they're doing. I'll show you some technical analysis on them, and you'll be able to evaluate them for yourself, whether you think they're a good investment or they're not. And before we get into this, keep in mind the disclaimer. None of these are recommendations to buy, sell, hold, trade, any of the stocks that I mentioned here, simply because I don't know when you're watching this video. I don't know your risk levels, your risk tolerance, your experience, and many other factors. So always consult with your own personal financial advisor first. Now, a couple of quick key points before we get started. If you're new to the videos, be sure to take a look at the TRADERSFLY.com website, where on that website, you can see a lot of great starting points for if you're new to trading. So if you go to the Start Here page, there's a lot of great videos, books you should read, books for technical analysis, video courses, private coaching, and some brokers you can start with. So there's a lot of great material here on this page, and much of the education is absolutely free. So take a look at that. You can even go into the training section. So if you're new, it's a great starting point, great resource with a lot of free training and free videos. With that being said, let's dig into some of the stocks here that we have and go over some of the charts. Okay, I'm going to go alphabetical order on some of the stocks here that I have in my favorites list, or actually just some of the common list. It's not necessarily my favorites, but it's just some of the ones that I keep track of. So if we take a look here at Apple and we go into it right here, you can see we had some trouble here at the 160 level. There's some resistance overhead at the 160. Even though we broke out above it a little bit, there was some trouble there. And I mentioned this in the critical charts memberships for our members that, hey, this could be trouble if it can't hold above that 160 level. And it wasn't able to. And then I also mentioned if it can't hold the 155, even this morning on Twitter, if it can't hold, should be trouble. You can see we have a lot of bearish volume right there coming in. It's not looking good for the stock. Will it come back? More than likely it should. It's just a question of, will we get to 150 or somewhere there to hold the support, or will we get to the 142 level? That's kind of an area that you're watching, but 150 could be the next level that it's hitting, and right now we're selling off about 2.19 points on Apple. In either case, it's acting weak. If we take a look at Adobe, Adobe's been very, very strong, very extended to that upside, especially if you look at the monthly chart. One thing I'm watching is this volume decreasing. If you look at the weekly, this could be a problem right here. This trend line is breaking, and you can see if that's breaking on bearish volume, that is not good for the stock. So further selling could create some significant moves to the downside, and it's still way above the moving average. So you can see right there it's breaking below that moving average on the daily, but the weekly, how far high is it from that moving average? It's extended. So with that being said, a break here and a follow through and continuing next day or two could send this one a little bit lower. Profit taking stock is extended. Autodesk struggling to get above that 115 level. It did get above it a couple times, but it's still struggling to get slightly above it. So you want to keep your eyes peeled for that level, for that breakthrough. Here also, here's kind of our support level on that moving average, still holding above it, but not but acting a bit weak. So be very careful there. AMTD, Ameritrade right here. You can see we have almost coming into a triple top right there. If it breaks through, could see further higher prices. Volumes coming in, looks good for now, but needs to break that for higher prices. Amazon's been acting weak below that $1,000 level, below that $1,000 range. And you can see right there, we're getting a little pullback. It's not anything major, not any flush or anything like that, like a major sell-off. That 950 is your key line in the sand for the support. That's what you're watching right there. So you can see if it's coming in lightly here, more than likely you'll get a bounce. Keep your eyes on that. But if we break it and we break lower, you could probably get into somewhere that in that 900 range or level. Let's take a look at American Express. This one also had a little bit of a consolidation area right here and then broke out a little bit, and now we're up in this range. So this one looks fairly good from that standpoint. So you can see if we take that line all the way across. We're getting into some nice price levels. You have some higher price overhead resistance at that 94, 95 range. So be careful around that level as you get into that, because more profit taking should take place around that level. AutoZone, we've talked about this one multiple times. That 500 level seems to be where the stock wants to hold. But right now the bounces are on lighter volume, so you're getting some of this sell-offs on heavier volume. So again, if you're looking for long opportunities or long trades on these, it would be for a smaller time frame and very quicker trading, not for longer term investing at this point, unless you're just averaging into it over the next year or something to that effect. Alibaba continues to get stretched over here. I mean, this stock is powerful. I would be taking my profits if you haven't already. But stock continues to do well. Bank of America also is starting to break this 25 level. It's getting into that level. If it breaks out again and you do it on volume, you could see further higher prices. It is a little bit extended, I think, for the year for where it was, but we'll see. They're all talking about tax reform, which I doubt will get done anywhere in the next year or so. I may take a couple years to get that through. But anyways, this one still, you can't deny the price action breaking above that 25 level. You still have resistance at 25.85, so be careful about that. Baidu had this triangle pattern right here. Here was our support levels. We had resistance right here. Stock broke out at that 200 range, continues to move well. You're going to have some issues and problems in this level as you get into the 250 range. So of course, be careful into that. Take profits into strength. So would I chase it here? No, absolutely not. Simply because we're already getting into that $250 range. Could it go much higher? Absolutely. But risk to reward for me is not worth it. Buffalo Wild Wings, I've talked about this one for our members multiple times. We have some swing points here. As you can see, we're hitting some swing points. We broke this 150. We got under it. Stock continued to move lower, and then we broke this supporting trend line and continued. Was a nice shorting opportunity, and now we're starting to find a base at around the $100 level. I think this may come up, retest, and could roll over again. We will see. If it does and it breaks the 100, you could see it again get into somewhere that like right around that range, which would put you at about $70. So we'll see. We'll see if it can hold the $100 level. That's something to watch and keep an eye on. Caterpillar right here continues to break out past this on this monthly all-time highs. Huge run up over the last year or so, and continues to make highs. I wouldn't chase it. It's amazing though. Well done. CMG right here, stock continues to act weak, but right now we're starting to get into a little bit of a digestion period. So this all right here is digesting. The 300 seems to be some decent support. Will they get out of it? Maybe. You're starting to get a little bit of bullish volume coming in, but it's kind of weak. If we get back above that moving average kind of and start moving up, I'd say, okay, it created a nice base, and that's possible. My projection was a little bit lower. I would have thought it would be a little bit better value somewhere around the 200 level, 240s or something around that range, which would put it right back into that swing point. But still, you know, I mean, 300 still pretty good pullback or size pullback. So if it digests here and we break out to the upside here, still a pretty decent value relative to where it was. If we look at, let's take a look at, where's another one? Facebook. We talked about this one. You're watching the leaders here. When you watch these and they're moving sideways and they're struggling to break up out of certain ranges, this is what fuels the market lower. And as I'm looking at it here, the market's down 6.75 on the S&P on my other computer, which has a live ticker. This is a 15-minute delay. But when you see these stocks like the Facebooks, the Amazons, they're not pushing higher. that's troublesome. That's troublesome for the market because these are the ones that lead the market. They're the ones, even though they talk about this rotation, these are still the major players. They're the popular ones. They're the ones that have a lot of volume behind it and a lot of money behind it. So when these are not leading, like 173 is that resistance level, and they're not leading, they're just isolating. It's not good. So this one, as for this stock alone, it's moving sideways right here. And if it can break out of that range, out of that 175 area, you could see further higher prices. But if not, I mean, your key support's that 165, 166 range. So you're looking for that price level. And the same thing with Apple, it's selling off. So when you're seeing these Apple, Amazon, Facebook, they're not doing well, it's kind of an issue here. FedEx right here, when you're looking at it, that 220 is kind of a trouble area. So I'd want to see it break the 220 before I got into it, simply because even though we did a little bit, we broke it right there for kind of the day, but it didn't hold. So we pulled back. And if it doesn't hold, well, you have action, but you didn't have price. The price didn't hold above your level. So again, it's doesn't fit the criteria of being good. Here's Google still moving sideways. I mean, that's all it's doing. Here's our support level at 900, still holding above this range. And now we have a little bit of resistance right here, 940. But again, this one's not acting anything powerfully as well, which is another big player. GoPro, I mean, this stock is toast. I've talked about it before. We've had some volume here that came in a little bit, but I mean, it's toast. If it can't get over $17, $18, and it probably won't, it's toast. It's kind of like Twitter. This one's toast too. So anyways, these kinds of things, when you see them right here and then they flatline, they're dead. That's it. It's called toast. Move on to the next one, because they could be here for 5 years, 10 years, who knows. Maybe something will change, but a lot of times they're done. Lows here, you know, came in, almost broke the highs, got into the highs, $83, $84, pulling back. We're kind of creating this upward trend line right there that you could see. It's kind of holding that base, and I wouldn't be surprised if it comes and tests that trend line and kind of moves in that direction. You could also say an upward trend line right there gives you an idea of how that stock is moving. Let's see, another one here. Get into MasterCard's been continuing to tear things up, especially when you look at that monthly stretch. I remember when this stock used to be $700 a share, and then they did the split. So back in the day, this stock was huge. So anyway, again, getting into some high prices, I would be taking my money and profits. McDonald's, same thing, still up there, nice and high. Could hold there for a while, but these stocks, when they're at nosebleed sections, it has me usually a little bit more concerned than normal. I'd rather see pullbacks. I'd rather see stocks coming back a bit. Microsoft, same thing. I mean, these stocks continue to move higher, and when you don't have pullbacks, you need to be a little more cautious. But you can see this trend line that's moving along with Microsoft. You know, we got into some toppy areas at 75, and it's pulling back a little bit, but still, it's still holding that trend line overall. The overall trend is still intact. Netflix shot up today, huge. I think we may see a tad bit of trouble at the 190, 192 level. So we'll see if we get a pullback tomorrow or the next day. But if it breaks tomorrow or the next day, then you'll see it run further. So far, this has been a massive play from that 166, 165 level. And if you got in it at that 149, 150 level, well done to you. Stock's doing fantastic. Nike just continues to isolate here around the $50 range. Not much is happening. Holding at around that 50, just moving. As you can see, this moving average just kind of holding sideways right there. So I'm waiting to see whether it can get above that $60 range or breaks below that 50. Those are kind of the key areas, because right now it's pretty much in this range. Even though you can see a little bit of a break right there, mostly it's still in that sideways range. Okay, let's take a look at price line, holding the $1,800 support, but flatlining a little bit. Still, Procter & Gamble got into that nosebleed area again, looking at this, and a pullback would be in order right here. Probably come into this, maybe consolidate a little more, and then either up or a break below the 90. So, you know, if a lot of stocks start to sell off, you could see this one break as well. But you could see the huge down bar today, 2% almost down on Procter & Gamble. Starbucks, same thing, moving sideways the last 2 years. Not much has changed. It's flatlined right there. Those are the ranges you're looking for. Can you play these bounces in these ranges? Yeah, you could buy it on the bounce and sell it and then short it up here or take your profits. You could play that range, but it's only happened a couple of times, so might be other picks out there that are worth it. STX or Seagate, maker of hard drives. You can see here upward, and then here we have a little bit of a downward pattern or channel that's happening. And one thing to watch is a little bit of bearish volume here, bullish volume also dying out a little bit. So we could come back to retest some of these at this $20, $30 range, because you have this $30 level right there that could also be support. And you can take that out actually all the way over here, and that'll be your 30. Because you'll see right there, that's the resistance, which is support, and here as well. Even though it broke a little below that, it's still kind of a key change in direction. That's called a swing point. So here as well, we could hold it there. If we can't hold it, you'll probably see it get into this level or range around the $24, $25 level. Anyway, and your highs are, of course, at the 50 level right there. So watching that area. Then let's see, we got Visa right there, continues to move well into higher prices, similar to MasterCard. Western Digital, if we take a look here, 90 seems to be the trouble spot right there, and the stock is just consolidating in that range. So if you take it out to the weekly, you could see there's that consolidation for you. At that 80 is the key support level. If it starts to roll right here, and then you see it rolling over, and you can see the bearish volume a little bit increasing. Right now, nothing key signaling. There's no major radar. But if you see it rolling right there, you could see that becoming a nice shorting opportunity. But we'll see. You know, so far the bounce has been very nice. But if you start seeing this is a distribution area. And you see this right here, bearish volume starting to pick up. Those are subtle hints a little bit. With a market being toppy, and the 80, if it can't hold, well, you could get back into some of these price levels right there. And that depends on how large of a sell-off the market is or the stock is, and so forth. Win continues to do well at the 140, holds up fairly well. I remember I was talking about this with our members right here in 2015, 2016, with the nice breakout point. Stock then consolidated again, nice breakout point, consolidated, creates stair-step patterns, and then we'll see here if it consolidates again. So time will tell. You can see this one does stair-step patterns. It steps and goes lower, stair steps, moves lower, and the same thing to the upside. It's basically what's happening, is it's stair stepping. Anyway, those are some of the ones I wanted to cover today as far as the stocks go. I hope you got some insights. If you look at the overall SPY, one of the things I'm watching is we're under this 250 level. We tried to get above it a couple of times. There's some action that's bearish that concerns me with the Fed just recently releasing some things. This is the upward supporting trend line. If that breaks, here you got distribution. We're already a little bit high. That could be troublesome for the market. IWM is the one thing that kind of looks okay, but you're coming in, again, toppy levels. It's like the P&G thing, right? Coming in right there at toppy levels, and then you get that, you might break out just a little bit, and it pushes it, and then you get that flush. One day takes out a week or two. So the same thing here with these markets, you know, if you get, you're at this toppy level moving sideways, if you get 1 or 2 days that are nasty, I mean, you could take out 3 weeks, a month worth of gains in one day, no problem. So be careful with that kind of thing. If you look at QQQs, also we're already a little toppy right there. This is more of the tech heavy here on the Qs. You could also draw a few trend lines, something like that with the cues. So be careful if these things break right there and you got some bearish volume here starting to pick up a little bit. You know, the market has been in more the buy the dip kind of mentality and those kinds of things, but if things just start picking up speed, you see that you're at those toppy levels. You also look at the VIX, that's also fairly low, right under 10, has me concerned. I like a nice sweet spot of the VIX around 13, 12, 13, 14. That's a very nice sweet spot to trade options, to day trade. Here in markets like this, you can't even day trade. With a low VIX, it's very difficult to day trade because you have no movement in the market. You need movement. And people who vote and cheer for a lower VIX, you know, you're actually rooting for things to really be against you as a trader, because you want volatility as a trader, as an active trader. If you're just investing and you're putting your money in, low VIX is nice because it just stays there, money sits there, and that's it. Anyways, thanks for joining me. Don't forget to take a look at the website here, TRADERSFLY.com, and to get some free education, and check out the Get Started page if you haven't seen it. And there's a lot of other things on here like books, courses, resources, frequently asked questions, all kinds of different things that you could take a look at and get your hands on. A lot of them are free for you to get started, to learn more about trading and investing. So take a look at that. You can also check out some of my courses on there, and definitely make sure to get subscribed to the newsletter list right here when you click that button. Sign up so that way you get insight on when I release new trainings, new materials, new videos, all that good stuff, along with any discounts, promotions that may come up or occur. Other than that, there's going to be some things on screen here, so click some of those buttons to subscribe, see some more videos, or get on the newsletter list. Otherwise, thanks for joining me. In the end, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.